I've been away for I've been I've been away for 2 weeks, and first things first, I really want to apologize for not being available during those moments, but I had to travel, so I didn't really do much analysis my time away, but I'm back now, so we can get things moving a little bit more. Right. Okay, I think Mukhtar is having issue joining. Right. Um, okay, so I hope everybody's been having a wonderful trading week so far. Like last week and the week before. Hope everyone had a very good trading week. I hope you guys made some money. And if you didn't make some money, I hope you didn't lose any money. So that's one thing. Um, is there any questions so far about something anyone would like to know? Because I remembered just in the chat room, Amos was asking about a few things about market sentiment and the COT report. What's the difference between both? I hope I explained that properly. Okay, definitely having issues. Okay. Yeah, so I hope I explained that properly. So first things first, I want to really know if anybody have any questions for me in regards to anything about trading first. Then I can then decide to move on to today's analysis. I want to be slightly more focused on today's analysis because the move that I'm looking at this time around happens almost every single year, and I don't know why Mukhtar stuff is not connecting. It keeps asking me to accept him in. Uh, yeah, so this move happens almost every single year, right? And for some reason, right, it's one of literally the biggest move that is more consistent over time. So um, if we're able to catch this year, we're gonna be making heavy pips, heavy, really heavy pips. We might be making about 1,600 plus pips on this move, and I believe it's really worth a shot. So let's get right into it. Mukhtar's trying to connect, but he can't get through. Oh, okay, he's in now. Right. All right, let's get to it. So this move I want to look at is gold, right? And if you if we look at gold, right, the way gold has been behaving recently, we can see that gold just last year, gold reached its all-time high. Gold has never been that high before, you know. Then he did the pull back to 20 moving average. Let me take this out of the way. So pull back to the 20 moving average, then bounced off, and now comes back to retest the 20 moving average, and just somewhere in between right there. Now, if you look at it on a weekly chart, we can see price came down, pierced through the 20, pierced to the 50, trying to get to the 200, but never got there, moved away, and all of that. And we look at it on the daily, it's just playing around, literally in the consolidation region. Between the 20, 50, and 200 EMAs. So now the main reason I picked this asset to look at today is simply because of this, right? This is this week's COT report, last week's COT report, and it shows that a lot of people are going short on gold. But before that, if we look at a seasonality chart of gold, we're going to see something quite different. Um, so what we see right now is between the 7th, uh, we should see gold move all the way up to around the 11th, right? Or possibly the 14th, and then start coming all the way down up until here, the 24th, right? And then when we get to that 24th, that's what's going to happen. Gold is going to start moving up. Now, if we look at the COT report, so I'm just going to go down a little bit and look into the COT report. What we can see here is this. Gold, you see this drop right here that we saw right here? That's a drop that's happened. And see this climb that's showing right here, it's still about to happen. It hasn't happened yet. And the more we see that climb, just like here, for example, when you saw that climb, it didn't really happen till later around here, and then that climb happened, and then that fall happened. So this climb is about to happen again. So this gives us an idea of what's to come, you know. And from looking at this anyway, we can see gold is about to move up. I mean, just last week they dropped a little bit of their position, but that's expected because we can see that drop coming between the 11th, which is today, and 24th, right? So between 11 and 24th, we're expecting a, kind of a down move of gold. And if you look at the chart anyway, like, it's a no-brainer. It's literally a no-brainer. You can see prices going up for 1, 2, 3, 4, 5, 6, 7, 8. So 8 trading days straight. That's about 2 weeks. It's gone up for 2 weeks straight. It hasn't pulled back. And see what is there. The 50 EMA 200 and the 20 is right there. So most likely what we're going to see from gold is gold going poof all the way down. Not all the way, but it's going to come down like that. And then what I'm expecting is gold coming back to somewhere around this region, you know, before the 24th. Now, if gold comes somewhere around this region, it would have cleared out all those people that bought already, which then gives us the opportunity to capitalize on the buy and get in on the long move. This time around, when it goes on buy, it's going to delete all those three EMAs and pierce them through and go through them as if it's nothing. Because right here, it's consolidated, it's unable to go. So it comes back to get some support, then boom, leaves. Okay. So now, if we look at that, right, the COT report is giving us a clue that that's about to happen, you know. But this small drop right here gives us the clue about the drop that we're expecting this week, right? So everything is looking beautifully aligned, right? So what we need to do now is to position ourselves for the buy, not the sell. We don't want to position ourselves for the sell because when you look at it, for example, you can see the 5 years, it says it's going to drop on the 11th, and the 15 years says it's going to drop on the 14th, whilst the 40 years says it's going to drop on the 19th. So we don't really know which date to go for between those three. But one thing that all three points at is on the 24th, all of them seems to be going up, and then you're gonna have that pullback right there and then continue. So what we're looking for is this 24th date, right? There's no need of us trading every single day, and that 24th actually falls on a Saturday, so we're probably going to be looking at the 26th or the 23rd. 23rd or the 26th might be the ideal time to go in, so we can go in on the 26th right here, or might get a early bird entry on the 23rd, depending on what market condition is like. Okay, so one thing I want to show you guys is this, right? I don't want us to trade every single time, right? A lot of us have businesses that we run, we have work to go to, you know, we have family to tend to. So trading is not something you want to do every single time. You want to just pick the specific dates that are very good for you in the highest probability and trade only during those times and take the long run, the long-term moves, right? So in this, for example, this move is going to start from July the 24th, right? And most likely end around September 6th. So that's about a month plus, right? A month and 2 weeks, right? So a month and 2 weeks and 2 weeks and a half or something like that. So, if you get a right position just around here and ride it all the way for a month, right? And we say in that month, for example, you have, let's say we attained 1,800 pips. At 1,800 pips, right? That should be sufficient enough, no matter what's it called, no matter what your entry size is, that should be sufficient enough to give you a specific amount of percentage on your account, on your trading account, depending on your trading account size, of course. If you have a six figures trading account size, you might not make more than maybe 10% on that trade, but 10% of a six-figure account, even if it's 100,000 account that you have, and you have 10% of that, what you simply getting is $10,000, right? And if you have a small account, for example, let's say $100 account, for example, or £100 account, and you go in, I wouldn't suggest going in aggressively, but if you go in to somewhat of, with somewhat of aggression, or even with a little amount of aggression, right? Let's say even going with 0.01, there is no way in that entire move that you won't make at least $150 back in return on investment. Which means if you had $100 and you made $150, that's 150% return on investment. You understand? So that's ideal enough to help you grow your account. So the smaller your account guys are going to actually make more in terms of percentage wise, while the big guys are going to make less in terms of percentage, right? But when you look at the money is higher than the other. Of course, the big guys are making more money than the small guys will be. But this is one move that's happened so many times, and I've missed it a few times in the past. And this time around, I'm not looking to miss this. So I would encourage everybody, to switch their mindset from the trader's mindset to the investor's mindset in this game. You're trying to play the long game. And I know most of you might have not held a trade longer than maybe 2, 3 days, maybe a week. This is a trade you're going to hold for a month, right? If you get good amount of positions around the entry zone, somewhere around here, fingers crossed the entry zone will be somewhere around here, but we have to look at that because the date of entry is 24th, which is on a Saturday. So we could go in slightly early, maybe on the 23rd or maybe on the 26th, right? Any of those two dates might be our entry date. But if you focus from now to that time, which is about let me see, which we 2 weeks from now, right? If you focus all your energy on just this one trade to get that one move, I assure you, you're gonna be smiling by the end of September, right? Results are not typical, nevertheless, but there is a very, very high chance that you're gonna actually make a whole lot of money just from that one trade. You know, it feels better to trade one trade and succeed than to take 10 trades and then win some and lose some. Because at the end of the day, you might not actually make enough money from that 10 trades. Okay. So I want to narrow it down a little bit in terms of entry date. All right. So if we look at the probability, right? Probability is showing that on the 23rd, we have a 71% chance if we buy, right? And if we look at the COT, the seasonality shows us on that 23rd, we have a 4. But because of 24th is a Saturday and the market is not open, right? There is actually a chance that the market would respond on the 23rd a day earlier than anticipated. Or we can go in on the 26th if you want to be on a safer option. And on that September 26th, you still have a 71% chance. The chances are equal. You can either choose 23rd or 26th to go into the market. Now, I would suggest you guys jot this down, this dates. So 23rd of July 2021 and 26th of July 2021. You want to look to buy gold. Now, we're gonna wait for one confirmation before we buy, which is the week, the COT report that's gonna come out on that week. If we see people taking out their position, if they're divesting from their short position, we're in literally a good space. And if they're adding more position to their long side whilst divesting from the short position, it's even sweeter. Okay, which means there's a very, very high percentage, at least 90% chance of the market going up during that period of time. Okay, so that's the one I really, really want to focus on this week. This is the one trade I want to focus on this week in regards to what to do. So I would say save the date on your computer, on your phone, set a reminder, and you want to capitalize on this one move that's going to happen. Okay, I want to try to see if I can get you guys to start trading in a way or start investing in a way that you don't have to trade every single time. You probably need to trade just twice in a month or twice in 3 months, for example, or even in a year, maybe just 10 times a year. But your return on investment during those 10 trades are going to be so ridiculous beyond imagination, because that way you have more focus, you make more money, and you learn a lot more, and you have less stress and less gray hair, and you have more time to do whatever you want to do. Okay, so for that right now, I want to know if anyone has any questions. If you guys have any questions, let me know. If you don't understand something, please let me know. There isn't, any call to be not outspoken at this time. So If you have any questions about this specific move, please let me know. Would you like me to analyze more deeper? Would you like me to do something? What would you like?
Yeah, I'm already on a good trade. I'm already on buy.
Okay,
Started
beautiful.
it on Friday. So I don't know, should I cut it off and wait till then, or I should just leave it?
You're already on the buy from Friday.
Yes.
Okay. So what I would say is you have to tighten your trading stuff. Are you in profit?
It was on profit there before the market closed on Friday. It was there on loss, on minus, or negative. So
Okay.
it was coming.
So if you're negative, I'm guessing you went in somewhere around here. So somewhere
Yeah.
between this right here, right? This is
Yeah.
where you went
Yeah.
in. So what ideally the market would most likely do is this. Market tends to test regions that it broke out from. So right here, for example, market is most likely going to come there. It hasn't touched the 200 yet on the 1 hour. So what we're going to most likely see in your case, in your scenario, is I would rather have you close the trade immediately, but I want to minimize your loss just in case, because what we can see here on the COTs, they're putting 19,000 new position to the short side, right? And trust me, market is going to pull back down. It will pull back down. So, and we know one specific thing, right, is from the 11th, we're most likely from the previous 5 years as of 2017, we could see price go down more around that period from the 11th, which is today, or it's going to happen on the 13th all the way till 24th. So what we're gonna see most likely in your case is when the market opens, it will give you a short period to set a wick to the top side, right? So there's gonna be a wick to the top side. I would say the moment the price gets to your break-even point, close your trade and let it go. Because what you see after that is market going back down. Now, I wouldn't say you should sell it. Don't sell it because looking at this, right, there's a confusion between dates. On the 11th, there's a downfall. On the 14th, there might be a downfall. And on the 19th or 20th, we might see a downfall. So we don't know which date out of those three we're going to see gold fall. So that's why I won't say you should sell it immediately. What could happen is gold consolidate a little bit around this region, go up, set a little bit of weak, consolidate, then come all the way back down. But I would say for you to have the safest and the peace of mind that you might crave, when trading, is to wait for the price to go up, come into break even, then close your trade whilst you watch the asset do whatever it needs to do. Most likely it's going to fall back down, try to test the 200, even break this 200 EMA and go further down, probably to around this 50 EMA region. So most likely price is going to consolidate this week between these two regions, about 157, 159 pips. And fingers crossed though, what I can hope to happen over the week, actually, the best case scenario is price to fall all the way here to this green zone below here, you know. But price might most likely consolidate within this region this week. So that will give you a massive headache if you're trading it, if you're trying to buy it. Because what you can see is price has been unable to break out of the 50, the 200, and the 20 EMA. So this candle set a massive wick. The next one after that closed within that wick. The next one after that closed within that wick. This closed within that wick. So price is not literally going beyond this point, beyond the 50 EMA. It's not going beyond that 50 EMA. So what you're gonna see is price most likely bottoming out and then going back up later on. So my suggestion is wait till you get to break even, close that trade, and let it go and relax and watch. Then come back on the 23rd or the 26th, whichever date you choose, based on your analysis, and trade the up move and hold it all up until September. I hope that helped.
Yeah. Yeah. Sure. It does. Thank you.
Yep. Okay. Does anyone have any other questions in regards to this trade? it's it's imperative that you guys let me know what questions you have, because this will help me or help you actually better understand when to go into this trade, because just in case I might not be available during that time period, I might be trading exclusively and say, you know what, I'm not going to speak to anyone and I want to focus around that time. So it's best you should ask any questions you have regarding that as soon as you can right now. Okay. If you
Okay,
have any
if
question.
we go in on if we're going on that 23rd or 26th, when is
Yeah.
going to be the exit date?
Your exit will be in September. So around September the 6th. The 6th of September will be your exit. So you're holding it for over a month, right? So you're gonna
Okay.
exit most likely. Actually, you might exit around the 3rd of September or the 6th of September, whichever you choose. But at that point, you'll be deep in profit enough to know that, okay, you know what, you're not going to stress. And what we might probably do around that time is write it back down for maybe a week. We might actually write it back down to just take a little bit more off the table from it. Or we might actually write it all the way back down to, December. But I'm not sure the December move until later, but we might probably write it back down for a week till about the 12th of September. Okay. So the ideal scenario is we go in on the 23rd or 26th around this region. We go all the way as far as we can. Ideally, maybe price gets here. This is just me speculating, by the way. And we ride it all the way back down. Probably price is gonna come here, do something like this, retrace like this, and then sometime in October, we're gonna ride it all the way back down to most likely here, the 200 EMA, wherever the 200 EMA is at that point. So, you know, but what we want to majorly capitalize on is this up move that's coming right now, and then probably that small down move after. Then we have to leave all this region alone till we get that move back down. Okay,
Is our
that's
entry gonna is our entry gonna be this month or next month?
no, the
The
entry is gonna
26th.
be on the 23rd, so it's gonna be in 2 weeks. So I'm literally preparing
Okay.
you guys for 2 weeks to come. So what I'm trying to do now is I'm trying to move away from the normal way of, okay, let's find a trade every single week to trade, because that could be stressful sometimes. If you can trade just 6 or 10 times a year, for example, and that 6 to 10 times a year, you're making a return on investment over 2,000, 3,000% return on investment during that small period of time or during that yearly period. It's better than you trading every single day. So let's say from now till next week, for example, you could just be observing the market, looking at the market, looking at moves. I mean, there's more moves to come. I can look at another move in a short time. But what we can then do is, like, all your focus is on this one trade. And then when that time comes, when you see that entry, you're gonna know where that entry is because you had enough time to study it you know so if you're taking a week to study how the chart is moving, understanding how the price action is moving for this asset and what behavior it has now, so by that time when you're going into the market, you already have more information, enough for you to actually trade successfully with that asset. That's what I'm trying to do. Okay. So
All right.
is there any further questions in regards to gold? Does anyone have any questions? Please don't be shy. It's not good to be shy. If you don't want to say it, you can just type it up. But if you don't have any questions in regards to it, we can check out something else. I'm just looking at CHF now, trying to see if we can spot any long-term opportunity in this. So in this, for example, it doesn't really look like a long-term opportunity, so we can just skip to JPY. All I just want to do is just find a long-term opportunity and just capitalize on that one. Okay, so this is another long-term move on the 20th. Actually, maybe not 20th, maybe just before on the 17th. JPY might go up all the way up on the 17th. And yeah, because of gold and USD JPY, they kind of do the inverse. They have correlations. So if we're expecting gold to go up, like JPY, for example, as you're seeing JPY going up, that means USD is going to go down within that period. So that means between the 17th, for example, or uh, the 20th, we're gonna see, or maybe the 25th, between the 17th and the 25th, we're most likely gonna see USD JPY also going down. So USD JPY most likely is gonna go down from that period up until August the 23rd. Okay, so let me check. On the 17th is next week. I can pop back and do this analysis on the 18th actually. So for now, I'll let that one be. Unless you want to take small opportunities, of course, like if you guys want to take the opportunities from tomorrow, which is the short one right here. There's an opportunity to go down, and if we check, let me see what the JPY COT report is saying. I really want to focus on just the long-term move. So like from these guys now, both of them are kind of like fighting with one another. So one is saying up, one is also saying down together. But overall, there's still more position on the long side. So yeah. So I wouldn't I wouldn't really want to touch this, but there's a possibility that JPY is going to lose strength this weekend for based on the seasonality chart. So let's look for something else. I just want to look for something long term enough that you just need to trade one time and forget about it and come and take your profit, at the end of the month. So no need to trade every single time. All right, so on the 9th, we see euro going up into the 11th. So euro is also not going to be ready till like the 19th. So we're most likely going to see a pullback from the 11th right here, consolidation slash pullback. So all right, yeah. I mean, I can try to look at any euro asset and see maybe euro has done anything. Okay, let's see. Yeah, so let me check what date this is. So on the first, right? So you see this move on the first, right? See this first move right here? You guys can see that, right? On euro. On the 1st of July. Euro is meant to fall up until the 9th uh, or the 5th, right? Between the 5th and the 9th, right? And if you look at what happened right here, look at what happened to euro. See, exactly on the 1st, it did this last week, and then look. So it says it's going to fall up until the 5th or the 9th, right? So on the 5th, if you had exited and you've taken that trade anyway, so you probably had 59 pips. It's not that massive, it's not that wide. But if you followed it up until the 9th, you probably still taken more. So basically, euro currently is following what it's meant to do. You see this? This drop right here that you see right there is the drop that you're seeing right here now. So now the question is, it's going to go back up, right? Euro is also going to go back up. So what we're going to look for is when is it going to go back up? And it's also a long-term move, so we can capitalize on that. And on the 11th, we actually see even doing more consolidation towards the downside. I wouldn't want to touch this until maybe the 19th, right? I don't want to touch the short-term move. So next week, Monday. So not this Monday coming, the one after that would be the ideal time to look into this euro asset, for example, and see what we can find in terms of holding a long term, possibly to about the 3rd of August, right? Or maybe even the 23rd of August. Regardless, we're going to find that out next week. Okay, so that's another long-term move that is most likely going to happen because it's already giving us sign that it's already happening. You see, this is literally already happening in our eyes, right? So the possibility that that's going to continue is high. Okay, so but that's for next week. Let's see what USD is saying. We got 10 minutes left. Right, let's see what USD says. So USD is meant to lose strength from the 9th. Right, when is the 9th? The 9th was Friday. So if we see any drop on USD, we might actually have a run right here up until August the 23rd or right here 17th, right? So let's see what we can find. Which USD asset has been losing strength? So okay, GBP USD, just straight out the bat, we can see GBP gaining strength. So if USD is losing strength, definitely GBP is going to gain strength. But I don't want to look at GBP for now because that asset is crazy. So USD didn't lose strength on the 9th on this one, so we don't want to really pay attention to that. It's been losing strength though from the 2nd. Now it could continue losing strength, but I want to see something that's already working, something that's already working in regards to that. Beautiful. So USD CAD, for example, look, almost touched a 200 moving average. Guess what it did? Boom, it lost strength on this night, right? See that tail candle that came down, and you see that up move that's been doing since. If we look at this, this is the same up move that he's been doing since. And then that fall that he had on the ninth, right there, is that fall that you're seeing right now, right here. Okay. So now we can actually capitalize on this asset for this week if we want to. But before I do that, let me check the COT report. Okay, what about now? I've increased the volume. I hope now it's better. I had my mic turned the other way around. My bad. I didn't really notice my mic was turned the other way around. I'm using like a studio mic, so apologies. It's turned the other way around. I hope you can hear me better now. So we want to look at the USD index, which is a COT report. Look at what just happened, right? These guys hardly put positions in this asset, and now they put massive positions towards the short side, right? And if we look at the seasonality, you can see why they put the massive position towards the short side. They're expecting the USD to deflate. So the USD should go down. That's what they're expecting. And let's go check. Look at that. Beautiful. Let me take out the non-reportable, the commercial, non-commercials. Look at that drop. See that swing right there? That swing right there is about to happen. Look at when they had this swing the last time. See when you see that swing? 2 candles later, that move happened. And this we're not looking at daily, we're looking at weekly charts right here. See that massive swing down? Is that swing here? So this swing down now, we're gonna see something like that happening. And on the good side, we're already seeing it happening on the USD CAD. Okay. So right about now, what we want to do is we want to capitalize on the USD CAD and find where our ideal entry is going to be to swing it all the way down, probably to around somewhere around here. It's not that much of a pips. It's 379 pips. So you're probably going to be holding this for a while, but it's USD CAD. It's not really, really, really that heavy, but it's a good amount of profit if you can take it. So, let me check. So we have the entry at that. So tomorrow, the 12th, for example, we might actually have an entry tomorrow to go in. So let me check probability for the USD CAD and see what we can find out. Okay. And I think this will be the last one I check right now, just to be able to talk to you guys after this, or even answer any questions that you guys have. So we can look at the USD CAD, and hopefully, fingers crossed, we do have a probability that shows that it will be beneficial for us. If not, we might have to win this one. So on the 7th, we have a buy actually on this. So it doesn't really look nice. I have to be honest with you. It doesn't really look nice on the probability. Now, if you have experience, you can trade this. If you don't have experience, just let it be. Just let it be. Don't trade it, because ideally, what I wanted to see is a higher percentage pointing towards the downside, throughout this week on USD CAD, for me to then say, you know what, we can trade this fully. But this will be on a high risk trade, but it does look good. It does look very, very good. So if ideally our entries on Monday, which is on the 12th, what we can actually simply do is we can go on the lower time frame, look for where price broke out from. Always look for the breakout region. So breakout regions are regions that you see that price consolidates like this, then price breaks away. When price breaks away from regions like that, check what happens. Over time, price always comes back to do what? Retest that region, then leave that region. I'll give you another example. Let me just zoom this all the way here. See this region right here? See this region right here? So price broke away from that region, didn't retest it this time already, break away from it. But guess what? It retested when it was going back up. So it could either act as a support or a resistance. See these small regions of consolidations, they're either support or resistance. If price breaks away from it, they become support. If price does not break away from it, they become resistance. So the way to trade this is simply this, right? When price gets into that region, you wait for this candle to close, for example. If that candle closes above it, then wait for price to leave that region and retest it. Once it retests, you go for your entry. If price does not break it and price literally goes all the way down, once price leave that zone and close behind it, it's going to retest it a little bit more, just one more time. Then you go for your entry. Okay. That's how to do it. So in this scenario, for example, let me delete that. In this scenario, for example, what we can see, there's two consolidation region right there. See this one right here? It's a tiny one right here. and then there's one right here. So any of the two will become our entry point. Is that a price comes to entry right here, price entry right here. But with this trade, for example, if you trade it at this point, your stop loss will be very wide at 137 pips. If you trade it around here, your stop loss will be around here, 77 pips. But if you look at what you're gaining in the long run, you're trading this asset all the way down to around here, 388 pips, ideally, or from here, 451 pips. Okay, so what we want to do now is this: we want to narrow this even down to further. You look at the 1 hour chart. From what I can see, look at the 1 hour price is most likely going to test the 200 moving average right here, then run all the way back up. Try to close all of these people selling already early. It will close them all back up, then come somewhere around maybe here. You see a tail kicking in around somewhere around here. See this line right here, and then you sell. So you want to wait for price. You don't even want to go into the price around here. You don't want to go around here. You want the price to hit the 20 or the 50 moving average right here, then start waiting and look what happens to the market. You want to see if price rejects around this point. See this point right here? I'm trying to cram a lot of stuff for you guys to understand in this short session. See this point right here, this consolidation. Just look for the consolidation region on your chart. You want price to kind of struggle around here and then do as if it's breaking away and hit somewhere around here, then go down. If price doesn't do that and comes below here, you can then try to sell it, you know. Or you can, to be the safest option, would be to wait for price to break the 200 moving average on the 1 hour and then sell it. Okay. But then at that point, your stop loss will be wide. It will be very, very wide, about 80 something pips. Okay. Or you can use your 2 times ATR. So in this scenario, for example, if you want to sell this, you can wait to this point around here and then sell. Now, if you sell this trade, you're going to be selling it up until around here, 23rd of August. Or if you want to be safe and want to get out quickly, you want to sell to around 28th of this month of July, 28th of July, or till 23rd of August. Those are the two exit time for you on this trade, and that's it. So we have one trade like that, and we have the gold trade coming in. We'll probably have a USD trade, another USD trade coming, and the Euro trade coming. So probably 4 to 5 trades. We can take those trades, and we don't even need to trade for a month plus to come. So if you guys want to get access to this tool right here, right? If you want to have access to this tool and be able to do this analysis yourself, just in case when I'm not around, you guys can trade by yourself. You can shout me out on Telegram and I'll get in touch with you guys, or you just go to business.damempire.co.uk, and on the tab at the top, you can click on pricing. And when you click on pricing, it's going to take you to where you can get the tools. You can actually get just the tools itself without the education part. So you can just get the probability, the seasonality, and the COT tools by yourself from there. Okay, guys, this would literally wrap it up for this session today. I hope you enjoyed, and I'll catch you guys on the trading week. I hope you guys have a beautiful trading week ahead. Okay, I don't really have time for questions because of time is over, but I'll catch you guys soon. Take care of yourself, guys. Have a lovely week. Bye.